Hi, I'm Nehemiah Richardson from Pengana Credit. Just wanting to give you an update of the performance of our wholesale fund, which opened in the 1st of October 2023. For those of you who don't know, our wholesale private credit fund is a multi-manager, multi-strategy private credit fund that invests in investment managers in both the US and Europe across predominantly two buckets of strategies. One is bilateral loans to companies, and the other is providing capital or balance sheet solutions to structured finance providers. So generally speaking, those would be non-bank lenders who originate pools of assets. So those are predominantly the two types of managers that we actually invest in, and they all play different strategies within those spheres. So coming to the performance of the fund, the backdrop since we opened the fund has been a shift in the market from being very dislocated with a high degree of uncertainty to a little bit more certainty that the interest rate cycle and conviction that the interest rate cycle will now plateau and we won't continue to see rising rates to fight inflation, and we're more likely to see higher for longer. And as a setting, I think a lot of our global private credit managers believe that that's sort of where we're at. And as a result of that, the volumes that we're actually seeing across all of our strategies have increased quite significantly. And when I say volumes, what I mean is origination opportunities, activity of deals or people looking for credit. And as a result, the opportunity set for our managers to continue to grow their businesses and deploy our capital. And within that context, there's kind of two things I can say. Number one is that the quality of the deal flow across all of our managers has been fantastic. And number two, the terms and conditions that they're deploying the capital are also fantastic. And that's then translating into really nice spreads and economics. As a result of that, from a top line perspective, the yield performance of our managers and returns that they're actually earning in the quarter on the whole kind of aggregate to returns that are above our net target returns, which are really pleasing. Now, the other side of the equation that goes to really nice growth and really nice margins is what's happening with asset quality, because what you don't want is for that to translate to negative performance from losses. And the good news there is the quality of the portfolios of our underlying managers have been fantastic. They've been pristine for the most part. So all of that yield is actually transferring, straight through to the return profile that actually comes back to you as our investors in the fund. So in summary, fund performance has been very strong. It's been above target, and the outlook that we actually have for the fund as we go forward into the coming quarters, we still expect to see really strong origination activity as companies become more confident, and actually we're seeing continuing bank withdrawal from the market because of increased regulation. We see the economy, whether it's soft or hard landing, we're kind of agnostic to that because we're still seeing very high quality deal flow with really good pricing, with really good protections, with really good line of sight of the cash flow profile. And therefore, we feel really confident about how the asset quality of the book will look, as well as the asset quality that will flow from the new originations that we actually settle. So on the whole, very positive environment going forward, and we would expect to remain at the levels that we see today in terms of our performance above target.